Welcome to the Business Blox podcast, episode 24. And on today's show, we're going to discuss JobKeeper for something different and a few other topics we'll get to later on. How's things, Dale?
We're back again. We had a good week last week. I think it was interesting with Stuart coming in. He gave us a good understanding of how brandings work. So I think that was good. A first podcast with a guest. I think that went well. And yeah, things are still all things lockdown down here. So Dan Andrews is trying to extend things. He's trying to extend the emergency response period in order to keep his arrest powers at bay. There is an initial announcement that they're going to be looking to increase the lockdown period by 2 weeks. That was a leak, so we don't know how true or how final that's going to be. But we wait till Sunday. So Sunday will be the day when we get all of our advice and we find out what's happening with things.
Okay, hopefully it's only 2 more weeks until at least businesses in some level can get back to normality. Even construction should be one of the first things back up and running.
It needs to be. It's getting to that stage where this is starting to really bite, and I think that a lot of people have lost. Early on they said, we'll be fine. We've got that early income. They had that flow of money where they were getting paid from their old debtors and their old work. They started to feel the slowdown, and they worked for that for a month or two, and then the last lockdown has really bitten really hard. We've had a number of clients who weren't in the JobKeeper scheme now looking to say, how can I get in? Just because they've had that huge drop in turnover in that last few months. So yeah, it's about assessing all those things, making sure they're eligible. So because of the longer rollout and this JobKeeper runs till March, some late entries, but hopefully very short entries. So if we put them in this month, at the end of September, they get reassessed and they get pulled out again. We've been doing JobKeeper application declarations, so that just rolled over. So if you haven't done your JobKeeper declaration, do that, get your money. The state government business extension grant is closing in 11 days. So if you don't get in within 11 days, you won't be eligible for that. Then that is probably all we've got at the moment.
And that's currently available to all Victorians, pretty much all business Victorians.
It is available to all Victorians, but everyone who's outside the metro ring or whatever they call it only gets 5,000. Everyone inside the ring gets 10,000. There is already discussion around tax cuts in the next financial year in order to get a boost to the economy. We'll see how they roll out. But I think the main part is the JobKeeper 2.0 was made into law in the last week, or I think it was even yesterday. So now the changes have become official. There hasn't been any deviation from what they originally set out. So we can now go through with that extended period of JobKeeper, and it's all legal now. So reassess at the end of this month. We'll run through it later. But yeah, there's a cut-off period at the end of September where you have to re-look at your JobKeeper eligibility and see whether you're in or out.
Yeah, you're reviewing your revenue versus last September quarter or last September month. And the main takeaway from 2.0 is the reduction in the payments, moving from 1,200 for December quarter and then moving down to 1,000 for the March quarter. I think, and that also be mindful of that means you're not required to pay the employees to the 1,500, you just pay them to, 1,200 and 1,000 in March. So I wonder if people, I think that's where business owners could get caught out a little bit. They forget and they continue to pay them overs.
I think so. Another surprise was this is a 3 fortnight payment JobKeeper. So this month when you lodge your JobKeeper form, you will get 3 payments rather than 2, which was surprising. So yeah, just something that should help people along the way. It's interesting times.
And then you've also, customers were hitting you up about property, 40% crash. There were a lot of headlines around the RBA and mentioning that the $1 million properties were going to become $600,000 and everything was going to collapse in on itself. Have you done a bit more research into how that all works?
Yes, so every time I hear a headline like that, I usually go direct to the article that's meant to be written about it. That article was a fictitious article based on the fact that the Reserve Bank had never done a study with such an extreme drop in property. And it was more, what if, would the banks be okay, or would the banks need government assistance? So it was nothing to do with them making a prediction on the property prices, which I don't believe they ever will. It was just them assessing the strength of the Australian banking system if there was a black swan event and property prices did dive by 40% for whatever reason, which has happened before, which they did mention, and that's why they chose the 40%, because it has happened overseas and it has happened in Australia previously, that property prices have dived by that much within a year or two. So it's not to say that it won't happen, it's just to say that they didn't say it would happen. Are safe based on their borrowing practices and how they've worked in the past. So even in the event of a 40% drop, there's not going to be a huge case of people walking away from properties. They said that there was some lending practices in the past few years that need to be tightened up on, but nothing major. Actual predictions and actual companies with a vested interest in property prices saying that there will be drops is the CBA saying there will be a 10% drop over the next year, the NAB saying there'll be a 10 to 15% drop, and the ANZ saying that there'll be a 15% drop in property prices. So I would take that as it's probably going to be maybe 15 to 20%, because these banks don't have a vested interest in people not lending and not buying houses. So if people stop buying, the banks stop making money. So they're always going to err on the side of conservatism with what they do. They didn't make any more provisions for bad debts, which was the original reason why they had such the write-down in their profits. So that was an interesting point, because they should be making more provisions for more people going, for more houses not being paid off. But I think they're managing the people who have been moved into this you don't have to pay your loan function, which they're saying 10% of those people who aren't paying their loan at the moment are starting to move into the critical side. But it's nothing to sort of get too worried about. Another issue that was brought up in the Reserve Bank article was the fact that all the growth in property prices in the last, I would say, 15 to 20 years has come from reducing interest rates, not growth in, or a minimal amount has come from growth in actual earnings. So it's safe to say that we are at the top of the market at the moment, because there's nowhere to go on interest rates. And the Reserve Bank and the Reserve paper said that all of the growth came from rising interest rates. So as interest rates go up, people's ability to borrow goes up, so they borrow more and their repayments are less. So there doesn't seem to be any factors that are going to affect their repayment ability other than increased rates of unemployment and a stabilisation of growth in earnings. So because of that, there's really no way that the property continue to go up. But they say because of the increase in the jobless rate, that's the reason why the property values are going to go down, and there's going to be a decrease in real spending throughout the economy.
And is this going to be a long-term thing with the housing market?
They're saying it's only going to be a year, which I don't believe. I can't see that we're going to peak out of this in a year and go, well, that was a lovely lockdown for 6 months, followed by a lovely 12 months of pain. And like, I think it's going to be a bit worse than everyone's letting on. I was talking to an electrician today who actually been through the last recession, and it's surprisingly how different. And that was I think it was I can't remember, 92 or something like that. So the recession we have to have, Paul Keating was the one who declared it, 17% interest. So the people who went through that recession have really carried through a lot of lessons in how they run their business for a number of years, and he's not too concerned at the moment because he was able to really pull his business back to a safe position quite quickly because he knew the markers of where he got burnt last time. It's the people who don't understand where they're going to get burnt and where their exposures are, and having big exposures to people who owe them money, or having large debts, or having properties that are going to go backwards, or having exposure to the share market. So it's mitigating all those sort of exposures and putting yourself in a safe position until you know where the economy is going to end. Not financial advice, not financial advisors. So please consult a professional. But it's risk management when it comes to these sort of things that you need to mitigate your risk. And what is going to happen is property going to come down? How do you mitigate your risk of that? That's sort of what people should be looking at the moment. But the old timers, the safely approach does work well in times of crisis, and you can sort of see why they've come for that. You'll find it very hard pushed. Someone who was really working back when the interest rates went to 17%, that would want to really heavily borrow, and that's just because they got stung by it hugely before, so that lives with them forever. So now it's a different scenario. It's a flailing economy. It's falling property prices that people have leveraged hard to get into. So if you've taken a small, say you took $100,000, you borrowed 90% to get into a very expensive home, and your property's going backwards, you're effectively losing money for a number of years. So if you hold, you get out of it, but it's going to be a few years of you paying additional money before you see any form of return on that, I believe.
And so, well, the saving grace is interest rates aren't going up anytime soon.
No chance. Yeah,
they're as low as they can. Is it zero or 2.25%?
It can go negative. Yeah. So they do have negative interest rates in Japan, which means that you have to pay money to park money in the bank. So if you have a bank deposit, you pay money for it. So it's just and that what they say is that then forces people to invest their money in the economy rather than just packing things into into banks. So I don't believe in that as a strategy. I think we should stick with low interest rates and hopefully the economy starts to tick up. But I don't know. I don't think things are as U-shaped as everyone says. I know America's back on track, but I don't believe that's real back on track. I think it's still struggling. It's still on government support. We're heavily on government support. Everywhere around the world is heavily on government support. The telling times will be when that gets pulled away.
Will Victoria get lost in the real national figures though? If the rest of Australia isn't in the same position Victoria is, so they're going to effectively have 3 months more of lockdowns in some form. They're going to be in a totally different situation compared to South Australia or WA.
I think you'll probably see a difference in areas like Adelaide and Tasmania, but only because they haven't seen that growth in property. So Sydney has exorbitant property prices. I think Queensland might fare okay, but might hurt because of tourism. So their tourism market being shut down is really going to bite there. So it's going to be a mixed bag. I think Adelaide probably fare the best out of every city, and it's going to be their time to shine. So go see a church, go hang out, whatever else you do in Adelaide, go see another church or something.
Enjoy some water.
Yeah. So I do think there will be mixed feelings in the economy, but Sydney is a very supercharged economy, and I think it's going to have a supercharged fallback. They've said that it's sort of on par to what Melbourne is at the moment. But yes, time will tell. And, everyone might have a lockdown again. Who knows what's going on in this world?
Yeah, we're at the mercy of government policy right now. We just follow the rules.
Yep.
If we don't follow the rules, we get certainly scolded, and you're the reason why we're having issues. Is everyone gets pointed out very quickly for doing the wrong thing, if it was
Pretty
something that
much,
6 months ago you could easily do. So it's quite an amazing time we live in, and hopefully it can be over very quickly. But
It's
so you
just
wanted to also chat about what you're looking to do with it. Stuart mentioned last week branding the business and moving into a new venture.
Before we get on to that, I probably want to have a chat about. I was chatting to an auditor again, so ATO
that's
auditor.
right. Yeah.
I was putting in a bit of time and trying to get as much info as we can about where they're going in the next sort of, I'd say, 6 to 12 months. And right now that they're dealing with cash flow boost payments and getting through that. So they've got the whole audit teams working on getting through cash flow boost applications and ones that are outside the norm of what should be of what looks like normal trading. They should be finishing them up and then moving into eligibility checks for cash flow boost and for JobKeeper. So to see that the people who have actually put in the applications have done the correct things. And what they're going back and looking at is actual bank statements to see if the payments have actually been made, super payments, employee registration details, all the sort of stuff that some people don't have. So they're just banging people, as paper copies of everything. So I think that's going to come back to bite a lot of people, and they're going to have to see, they're going to see the ATO may sting them for $100,000 worth of cash flow boost plus $70,000 to $80,000 worth of JobKeeper payments that they've spent. So watch this space. It's not just going to be the eligibility requirement, which will also be a thing that they check on. So as they say, every time you lodge JobKeeper, make sure that you've saved the details around your eligibility. They will be coming and they will be checking, and they will be checking a lot of people. They'll start with the more extreme, and then they'll work their way down, and they get to as many people as they can. That sort of seems to be the plan.
Yeah. We'll help everyone at the beginning, and then we'll check later, and then, it'll be hopefully not too many knocks on the door. Well, not knocks on the door, phone calls. We can't move around these days.
And another thing she was saying is that the auditor's decisions get put up to a review panel. So whatever she approves and disapproves has to go to a panel that then reviews her decision, and that panel sit down and they make a decision about what they will and won't allow and what they consider to be fair and what they don't. And that changes month to month, week to week. So she says that as the JobKeeper situation gets longer, the decisions made by the panel and what they're passing is changing and getting different. So what they would have passed at the beginning of JobKeeper is different to what it is now, and it will probably also be different in another sort of 3 months when they start looking at things. So it's a very fluid environment at the moment. I don't know how that stacks up, legal-wise, and if there was a challenge around the eligibility of cash flow boost, where would that go? But that seems to be the way the decision's being made. I would say that in all likelihood, they would be seeking legal advice on the edge of that. So there would be legals as part of that team. But it is a double check arrangement. So the person who is doing the audit is not doing it based on how they feel about the situation. They're doing it based on direction from a central team of people, which I thought was interesting.
Okay. So one person isn't. Are they expecting business? So they're operating on a good faith basis. If they can see you've tried to do the right, like you're doing the right thing, and this is how you've gone about it.
We've had 2 audits. We were completely honest about the way that we did them. We were just doing them based on the circumstances we were presented with, and they were very helpful and they ticked everything off. So I think people should just be honest and say, this is how we've done it. This is why we've done it. I know it does not look like it should have been done that way, but here's the source data of what we based it on. Here's why we made the decision. it seems to work fine.
Yeah.
So if you're doing it, so what they seem to be looking for is that, they're saying they had 3 pensioners who never earned over $100,000, now all claiming JobKeeper, now claiming $100,000 worth of cash flow boost, and saying that they were paid $300,000 worth of cash, and that's why it didn't go through the books. That's why it wasn't on the records. That's the extreme end of where things are at. So I don't think they're concerned about, people who just fall outside of what's not happening. Saying that though, they were describing a case in where there was a setup of a business where the director pulled $300,000 every year in June quarter, paid the tax on it for the past 5 years, but never actually drew the money down. So they never actually pulled the physical cash out of the bank account. They disallowed that based on the fact that there was no actual physical payments. So that one of the big stickling points is there has to be a physical transfer. They had history. They had, they could see that it happened every year. They could see it was in June every year. So it was really as part of their normal business trading conditions. But because that physical payment wasn't made, it was disallowed. Maybe a room for challenge. It's $100,000. Yeah, you might say that one hit the courts.
Yeah.
But that seems to be the thing is physical payments, regular sort of, it has to look like a business, basically.
Did they mention if these stories were with tax agents or were these customers going about it themselves?
A mixed bag. They said that some were with tax agents, some were with individuals. They did say that there was a lot of people trying to rort the system, and that they're willing to put in the time and just work through them. So they can see who's rorting the system. They understand the difference between a legitimate claim and a not so legitimate claim. It's just getting the time to go through the list.
Yeah. So this will be 12 months at least.
Yeah, at least easy. Yeah.
Good employment. Get a few auditors on the ATO.
Well, I mean the ones we've dealt with have been pretty pleasant. I think it's been, so they've also said this is a good change of pace to what they're normally doing. So they're normally coming in hitting people hard on the head, whereas they can see they can see the difference between a rort and just giving people the help that they need, and they're very receptive to trying to work with people who are looking to do the right thing. But also the people who are doing the wrong thing, they're quite happy to give you 200% penalties, late interest, and everything else that goes with it.
Yeah, I'll throw the book at them.
Exactly.
So moving off audit news, run us through the branding.
Yes.
We had Stuart on last week. The new enterprise.
Yeah. So I think that our next sort of JobKeeper for us as a podcasting expedition, it seems to be done and dusted, I would hope. So now it's us moving into I don't know what we call it, building a brand and a business and structures and systems and everything you need to set up a scalable business that doesn't need, I mean, it sounds corny as hell, but it's not going to be 10x rubbish. It's a proper business, and the time that you need to put in to actually building the internal systems, building the external picture, building the brand, building the marketing. It's sort of going through those steps, taking people through what we're doing, what's working, that sort of thing. It does have that sort of that cringy building a business that should look after itself, because it sort of is what we're trying to do, but it isn't in a way, because we're going to need a lot of hands-on involvement in it. But we're sort of taking the option of we're not going to be the main processors behind the work that gets done. We're going to be the drivers around the things that get done. It's just taking people through the process of that, how it works, where it gets us, what fails, what doesn't work, and when it's when it's hugely successful and listing on the stock exchange, I'll sell it to YouTube, not YouTube, sell it to Netflix for $1 billion.
Yeah, and documenting experiencing along the way. So you are running a
Yeah.
forex trading group. Is that what the idea is?
That's what I was getting at. Yeah, 6 bitcoins to get in. The wallet changes every 5 minutes. We'll send you the details.
Yeah, but on a serious note, I think it's as much about documenting experience, getting away from just talking about theory all the time, and sort of showing the practical and how we've gone about it. Hopefully something that we can revert back to when the company is 12 months, 3 years and 5 years old, and sort of look back on this and see what's changed and how we really built the foundations at the beginning to be able to scale and create something that can be managed with a lighter touch than us being right in the heart of it.
I think we've got that maturity in what we do now, in that we're not, like when Tax for You was made, it was just like, get a logo, let's go. It's sort of, there wasn't a lot, and it was build it as you go. I've got the comfort now where I can spend the time and I can put, as we were saying, I got the name 2 years ago. We've discussed the idea for the past year and a half. We've really refined the idea for the last 6 months. Now we're sort of looking at sort of launching. So it's not an overnight thing. It's really a crafted branding, more specialized niche. Sort of, I wouldn't say it's not a niche business, but it's a niche focused business in that who we're looking at. So it's sort of something that's different that I'm interested to see if it does work. So is branding something that does pay dividends? Are you able to market a company without, with characters rather than actually being, me being the person who markets it? So you're selling the actual business itself as its own brand rather than the people or rather than the people, basically. So the people are the business, but the brand's the hook. So you build a strong group of people, but you also build a strong brand. So that's an interesting thing. We can afford to throw a bit of money at it at this point. Does it work? Does it not? I'm willing to take the shot. I feel confident in what we're doing. I feel that we have a lot of experience. We have experience in creating things, but this will be our real big test. I mean, it's not going to be perfect. We're not experts in it by any stretch of the means, but I think we do have a lot of experience in businesses, and it is, people come along for the ride.
Yeah, it's something that we've certainly talked about a lot, and it's now to put up or shut up, really. If it doesn't work out, it doesn't work out. But now we want to create a brand that team members from that brand can give a level of service that it doesn't matter the name or who they are, they're always providing that service. It doesn't need to be Dale, it can be Chris, or it can be anyone, because they're all under that same brand and provide that same level of service and quality product.
I think that the turning point for me was when, say the name Apple, you know what it means. That's branding. That's branding at its purest. That is the heaviest branded thing, around. But we're not saying we're going to be anything like Apple, but if we can find even 1/100th or 1,000th of what they did, and people can understand by looking at what we present, what we represent and who we are, that's half the problem, is getting that sort of story across. So you get that original engagement without actually having to talk to people.
Yeah, and the current climate, the opportunity is gigantic. The opportunity just with the technology and situation we're in, it's you can't. That's pretty much why we're starting. We just can't ignore it now.
Exactly. It has to be done.
You have to be done. Okay, well, we've got about 4 or 5 more weeks until it really kicks up. So we'll sort of talk about that across the next half a dozen shows. But anything else you want to leave us with, Dale? The end of JobKeeper is...
JobKeeper, go away. I mean, it's been fun. We've enjoyed ourselves, but, we need a break. I need to go get out of my house. I'm being
Hopefully
paid
it
to
ties
stay
in
home.
with COVID.
Yeah, it needs to open up. I think this will keep us honest. The podcast. I think us putting it out there to our millions of fans will make sure that we actually finish it. I think one of the hardest parts of starting anything is that constant grind of keeping it going and keeping that energy in it. I mean, even when you're not, you're talking, what are we, 2 months before we even start launching things. So it's a long time before result, and it's a lot of pushing, it's a lot of work. But I think I want to make something to be proud of, and everyone to get involved, and we make something that's different and works, hopefully.
Well, don't worry. You can be proud of this podcast already. I don't think there's much more you need to be proud
Yeah,
of.
well, that's it. I got all this. Look at these backgrounds. This is that fake background I got. It's, so yeah, we're getting there. We're getting better anyway.
Okay, excellent. We'll continue this again next week. I'll speak to you then.
Thanks, mate. I'll catch you around. Yeah.